Pinterest has a similar story. Here's a company that came public last April. Its stock initially ramped to the mid-30s, then it got pulverized. The last quarter in October was widely considered disappointing, and the stock ended up sinking to the high teens at its lows in December. That was painful, because you know I liked it. After that, the stock started to bounce, so Pinterest had a bit of momentum coming into the earnings, though it was still well off its highs. That's important. Then the company delivers a truly blowout quarter. 4-cent earnings beat off an 8-cent basis, substantially higher than expected sales, and fabulous global monthly active user growth of 26%, key metric, and terrific average revenue per user, also good metric. Even better, Pinterest gave us bullish guidance. They monetized. What's driving the strength? The company rolled out a new version of their app for Android. Isn't it funny? Because that's also what happened with Snap. It's like people always underestimate how important it is to have something for Android. They have faster download speeds. They're seeing more major growth in video. They launched a More Ideas function that shows users digital vision boards that they might be interested in. Really, though, Pinterest is giving investors everything they want. Strong revenue growth with steadily rising profitability. No wonder the stock ignited after the quarter. Stock surged to $26 2 weeks ago. It has since cooled off back to 22. And you know what? I think it's kind of nuts that it went down that much, but we know what's happened in the market the last few days. Meanwhile, the two losers, Facebook and Snap, have already started rebounding, which makes a ton of sense to me. You know what works in a world where people are afraid to go outside because of the coronavirus outbreak? Social media. If you can't interact with your friends in person, at least you can interact with them online and show pictures of their dogs. Now, incredibly, Facebook's the cheapest of the bunch, selling for less than 19 times next year's earnings estimates. 19. That's like some banks sell at that. And that's in part because the regulators have a target on Facebook's back. Still, I think Facebook's the safest social media play if this market keeps getting hit. It's inexpensive. But the bottom line, you want to know the difference between the big winners and the big losers in social media this past earnings season? It turned out to be about Mrs. Haversham. It was about the expectations. As I see it, all four of these companies are doing well. None of them had perfect results, but Facebook and Snap had run going into the quarter, while Twitter and Pinterest had sold off ahead. So Facebook and Snap got pulverized, while Twitter and Pinterest caught fire. You get it? Right now, I like all four.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.